how much money should you put aside for your tax bill? Now, we know whether it's in business or personal life, that feeling when you get a notification of a failed direct debit, or you look in your bank and what you need or what you thought was there is not there, it's awful, isn't it? And one of the biggest times we see this in business is when it comes to tax bills, whether it's corporation tax, self-assessment, VAT. The reason for this is not because the business or you didn't make enough money. It's because these are delayed payments. And especially when it comes to corporation tax, the sale that you're paying tax on could have happened well over a year ago. And that money's long gone on something else. So the solution to this problem is, of course, put the money aside as you go in a separate bank account, if possible, as soon as it comes in. But how will you know how much to put aside and when? So we've put together a step-by-step guide for each of the taxes. If you're a sole trader, skip ahead to point 4 because the rest won't apply to you. But number 1 is VAT. So the obvious rule of thumb is put aside 20% of each sale for the VAT. Your invoice itself literally tells you how much VAT was on it. And of course, the good thing with that is that all of your VAT inclusive purchases offset your sales VAT. That decreases what you owe to HMRC, and therefore putting aside 20% of each sale will absolutely more than cover what you owe. Now, depending on how your cash flow works, you might not be able to set aside the 20% of each sale. And that's okay. If that's your situation, then the best thing to do would be to have an idea of the expenses incurred on that sale, reduce the amount of VAT owed on that sale by the VAT on the purchases, and then set that aside. I won't go into detail on that now because it might sound a bit too complicated. But the best method to do that is to use management accounts, which allow you to track your sales in greater depth and know exactly what your cost of sale was, and therefore what your profit and VAT to set aside will be. Number 2 is corporation tax. Now, corporation tax is payable on your profits for the whole year after your year-end accounts have been done and any and all allowable deductions have been included. So throughout the year, it is tough to have an exact figure on this. And of course, this is subject to some change, touchy subject, as of April 2023. However, you can use your year-to-date figures to set this aside each month. What you'll need to do is take a few minutes to look over your profit and loss. You'll go right down to the bottom and it will tell you your net profit. So that's once all of your expenses have been deducted from your turnover. What you'll do is you'll take that net profit, figure out 19 or 25% of that, depending on which bracket you're falling into, transfer that amount into another account, and that saves up for your corporation tax bill. Again, this method should get you more than covered, meaning you're not only saving for tax, but you should have a little extra sat there for a rainy day as well. The third area is directors' self-assessment tax returns. Now, this is actually probably the easiest to predict if you're a director of a limited company. For the majority of our clients, we'll put you on the tax-free salary throughout the year, which is currently the £12,570, meaning there's no tax on that. And then essentially you will decide what you're going to take and therefore what you're going to pay by how much dividends you take from your company. So again, after April 2023, this has changed ever so slightly, but bear in mind your tax-free dividend allowance. And then anything you're taking above that is 8.75% of that will be set aside for tax. Something you'll want to be mindful of is HMRC's payments on account. If you owe more than £1,000 in personal tax, they will ask for a payment on account to offset against the next year's tax. Now, this does hit quite hard in year 1 because essentially you're paying 2 years worth of tax. But after that, it will even out a bit because you've already paid the upcoming year's amounts. Finally, sole traders for your self-assessment tax returns. Obviously, things are slightly different because you've just got this one amount of tax to pay, but we still need to figure that out throughout the year, don't we? So Be aware that, of course, most of us have that tax-free earnings limit of £12,570. So what we would advise is to be checking your profit every month. Once you go over that limit, your £12,570, what you're going to need to do is calculate what profit you have above that threshold. So say then you've made £15,000, great, deduct 12,570, that leaves you with your taxable profit. And what you'll then need to do is set 20% of that aside. Again, of course, once that gets over £1,000 that you're owing in tax, there are payments on account to take into consideration too. And it will be hardest in year one, but do take solace in the fact that you've essentially covered a big chunk of next year's tax and you won't be doing that again. So yeah, as MTD for ITSA comes into play, you may or may not know huge amounts about that, but check out our blog on that. Your mandatory quarterly submissions will give you that kick up the bum to at least know each quarter where you are if you can't do it every month. So if this has cleared some things up for you, excellent. But if it hasn't, don't panic. If you're now thinking, how on earth am I going to remember to do all this? Don't worry, we've got you covered. We know you didn't start your business to sit and worry about numbers and do calculations all the time. That's not what you're here for. That's what we're here for. So all of our clients receive, as standard, a quarterly summary, which includes your year-to-date estimates for your personal tax and your corporation tax, or your personal tax if you're a sole trader, as well as payment reminders of what's coming up in advance of the day that it's due. So it gives you time to make those savings if you need to. So this is quarterly as standard, but it can be upgraded to monthly as well, so that you have peace of mind knowing 12 times a year you are setting aside what you need to and you'll be covered. So if you're ready to take some of the stress out of running your business and get these helpful nudges throughout the year about what to be setting aside, then please do get in touch with us to have a chat.